Most people know that cash is king when it comes to spending. It's easy, it's familiar, and it doesn't complicate things too much. But in terms of keeping itself valuable, it's not always the best when it comes to keeping your wealth. Sometimes you have to look at other options instead of letting your money stay in your bank account, accruing interest over time. You'd be surprised at the amount of money you're actually losing just by letting your money just gain interest over time instead of catching up with inflation. This is Intelligentsia, real life advice for practical and financial goals. What we want to talk about today are some examples of assets that help you retain your wealth over time and even help you earn more money from your already existing assets. So let's get to it. When you think of cash, you think of earning money and spending money. Anything left over is either spent at a later date or saved up for emergencies. But over time, money loses its value due to inflation, and banks don't always keep up with your interest rates to make sure that your money is as valuable as it used to be. Housing that you could have purchased for something that's worth just a bit more than your annual salary could be worth 10 times more over time. And we're only talking about the value of money and not how much housing prices can go for without factoring in inflation. The point we're trying to make here is that the value of your wealth can't always be measured by how much cash you currently have with you, and it won't always remain the same value-wise. So it's important to know that there are other things that you can put your money in that can help you circumvent that loss. Wealth erosion is a real thing and it affects everyone. But there are a few ways you can do to keep your wealth intact. If you're someone that's interested in having a more physical form to your wealth, investing in precious metals such as gold, silver, and platinum is one of the ways that you can keep your wealth. Over time, it's been proven that when inflation is at an all-time high, the prices for precious metals rise as well. This is because they are valuable and important in keeping their value. The same pound of metal that you purchase could be worth more in the future due to money losing its purchasing power. While it's good that the value of precious metals won't change as much over time, they are still susceptible to changes in the market, and demands for them won't always be as high as they are. However, if you're someone that feels like investing in something more practical and in demand in today's market, perhaps you're more interested in investing in industrial commodities. There's a reason why crude oil is considered liquid gold by industrialists and economists, and it's because it's the single most important commodity in the world. With the world being powered by electricity, oil being the primary source of energy production certainly allows its claim at the top. We use a lot of different things in our daily activities, and being able to own practical and in-demand commodities is important in keeping our wealth. Commodities are naturally valuable because production happens every day and raw materials are generally valued and used regularly. With the world's demands for innovation, it's very likely that oil, precious metals, and other raw materials are going to be needed in the foreseeable future. Whether it's construction, fabrics, electronics, food, or anything else that requires raw materials, being able to own and retain your money through these commodities is a good thing. However, it's not as easy to convert it into usable money. That said, however, perhaps converting your cash into safe haven currencies may be your preference. Being able to store your money in a secure and stable economy is wise in the sense that regardless of what happens to your country's currency, since it's stored in another country's currency, your money is still as valuable when converted back. Fiat currencies aren't backed by gold, and as a result, it's backed by a country's government. Switzerland has arguably the world's greatest economy, and as a result, the rich consider it as a safe haven to store their money in. Most governments also offer certain assistance in the form of government bonds or treasury securities. These are debt instruments that are used by the government to fund various purposes. These are considered as the safest securities to put your money into as they're backed by the full faith of the government. Some examples of these are T-bills. Also known as treasury bills, these are short-term debt securities with maturities ranging from a few days to a year. They are often marketed at a discount to their face value, and when the T-bill matures, investors receive the face value. Treasury notes or T-notes. T-notes have intermediate-term maturities, typically ranging from 2 to 10 years. They pay you a fixed interest rate, also known as a coupon rate, every 6 months until maturity. Treasury bonds. These are long-term securities with maturities that exceed over 30 years. They too pay you a fixed interest rate every month. And lastly, You have Treasury inflation protected securities or TIPS, which helps protect the investor from inflation. With all that said, government securities are highly liquid, so you can buy and sell them easily in the secondary market, allowing you full control of when you need cash. Generally, government securities help the investor in the financial market and serve as a benchmark for interest rates in an economy. The main idea here is that you own securities that grow in value and protect you from money erosion over time. But if you want something that allows you to beat inflation through the stock market, then perhaps value or growth stocks may be your best bet. It doesn't matter as much which you prefer, as with growth stocks, they generally deal with technology, and with an emerging market, they can grow fast but are often far riskier. Or you can go with value stocks that are more stable because they're generally along the lines of the industrial sector. Over time, certain stocks grow, and it's ultimately up to you how you approach having your money work and grow for you. If you decide to go to the route of being paid dividends over time, you're essentially getting your money up front in regular intervals. If you're someone that prefers to buy something and wait for it to accrue value over time through capital gains, then you're still allowing your money to grow and pay you back for your initial investment. For some, dividend-focused mutual funds are ideal and affordable, and you're allowed to keep your money safer through different options in the market. Understand, however, that stocks have inherent risk, and if it's in line with your risk tolerance and financial goals, that's what you should go with. If you have more spending money, perhaps land and real estate may be your preference. It's no secret that land and real estate are expensive commodities, and it's understandable that over time, it gets more and more expensive. Land is important for a lot of different purposes. It allows you to build homes on it. Public places such as parks, schools, hospitals, and other important places are built on land. As a result, there's a finite supply, and scarcity often impacts the price along with a constant demand for further development. Most people involved in the financial sector consider land as a non-depreciable asset because you simply cannot produce more land. It's an important investment hedge, as your money will only grow if you place it in something that's valuable to everyone. With that said, those are just some assets that may assist you in protecting your wealth over time. While it's still wise to have money in your savings account for emergency purposes, it's hard to argue that keeping it there for the purposes of wealth building isn't necessarily the best idea out there when you have a lot of options that can assist you with beating inflation and money erosion. Being able to retain your money's purchasing power over time is an important thing in wealth building, and having the option to keep your money as valuable as it is over time will help you out in the long run. Simply keeping your money isn't enough in most cases, as the value of money, assets, and other things change with the times, and it's up to you to keep up with it. If you've enjoyed this video and found us helpful, please hit the like and subscribe button. We'd like to be able to grow alongside you, and we'll come to have you in our next video. Stay mentally healthy, and let's get financially fit together.